Shane, it is very good to see you. Today, we are talking through day trading, the risks and the rewards. Fueled by COVID lockdowns and the rise of commission free brokerages like Robinhood, online trading or day trading has seen a huge rise in popularity in the last few years. Take a look at these new accounts created on E-Trade. It's kind of unbelievable. So, I think that self directed investing offers a lot of potential cost savings, learning opportunities. What are the other advantages?
So self-directed investing like this can have some advantages because you're in complete control, right? You make the decisions, you're calling all the shots, and you're able to move in and out of things very quickly on a day-to-day basis and do exactly what you want to do. There is a few risks that come along with that, unfortunately, but really the biggest advantage is just the total control over the account.
Okay. So I was very surprised to learn that these studies found only 1 to 3% of day traders consistently earn above market returns. And to put that in stark perspective, we got this graph, which shows us we might be more successful simply going to the casino. So, why are day traders not seeing this success?
Well, here's the thing that happened during the whole COVID time, right? People were bored.
Hmm.
It kind of became a trendy thing to jump on one of these apps and start investing in various stocks, even cryptocurrency, which so many people just lack complete understanding of, first of all. So it was kind of a dangerous, slippery slope for a lot of folks to get involved in. Then we saw things on social media and in the news and on TV about, you may remember the GameStop stock that
Hmm.
went to the moon, as they said, right? And we just see these things that are happening kind of almost in pop culture and in society that drive the decision making of these investors on these apps. And it really just leads to poor decision making using this internet hearsay, rumors, all those sorts of things as your investment advice really wind up just costing folks their money. And
Right.
if the goal is to buy low and sell high, if we hear about these trends, these rumors that this stock is super high, we want to go buy it. We're too late. We missed the boat, right? If the stock's already high, you missed the boat. So if you buy it high, you're going to wind up selling it low, unfortunately.
Right. They're not following a plan. They're following the headlines. That makes sense. You say, though, all right, let's say you do want to open an online account. Maybe it's some fun money as opposed to all of your retirement savings. You say first you need to consider your approach and expectations.
All right, so you want to temper your expectations a little bit, right? Maybe you're not necessarily an investment expert. If you are, then that's great. But what we see a lot of times folks do that makes a lot of sense is take a portion of your wealth, maybe the minority in most cases, a small amount that you want to have fun with, you want to use for trading on a day-to-day basis, set that money aside into a dating account in one of those types of platforms like you mentioned earlier, and then take the rest of the money that really has more meaning, more need for it in retirement, safeguard that money, invest it professionally, have it professionally managed, somewhere where you know it's being watched and monitored, so that you can have a little bit more fun with the rest of your money and not have to worry about losing the bulk of it.
Right. Because I don't want to worry. That's which is in line with this second point here. You say consider your risk tolerance.
Risk tolerance has to be definitely considered because when we're in this day trading world and we're moving in and out of stocks on a day-to-day basis, or we're in ETFs or whatever we're using, we're in a pretty high risky environment doing that, right?
Right.
Especially if we're using that internet headline as our investment advice.
And then third, you say consider the risks. And one of those risks is behavioral finance, which you kind of touched on before, which is that we as humans tend to buy when we shouldn't and then sell when we shouldn't.
Right, and it's just kind of that irrational thought process that comes along when we hear things on the news, when we see things that our friends are doing, our family are doing, and it drives us to make decisions that maybe don't make a lot of sense on paper, but seem like the right thing to do in that moment. But oftentimes in the long run, it doesn't work out to your advantage.
Hmm. And then the second risk that you want people to be aware of, tax implications. A lot of day traders may not realize that they're creating taxable events.
Yeah, I saw this happen quite a few times actually. Folks that jumped on these apps were going to become stock market experts and geniuses overnight on the app. Maybe they're making some money, which is great, but then they got surprised when they saw a tax bill come tax time. Now, not necessarily a bad thing. If we're making money, we're going to pay taxes. So the only people that do pay taxes are those that are making the money in the market, right? So not necessarily a bad thing, but just make sure you don't forget about it because it's going to come your way if you make money.
Hmm. I'm glad we got to talk this through. If somebody wants to talk to you about opening an account and then maybe the guardrails that should be put in place, what's the best way to reach you?
Best way to reach us is by phone or online. Our phone number is 602-456-1928, or visit us online at winstonandcompanies.com.
All right, Shane, thank you.
Thanks, Erin.